We've been away. We've been away for like the last, I think 3 weeks, maybe 3.5 weeks, I think. Um, so it's good to be back. It's good to kind of restart our standard programming. On this show, we really focus on three kind of general areas: the money and finance of space, policy, and infrastructure hardware that's going up there. And we do that with kind of three different kinds of shows. One, we have a guest pretty frequently, less so lately, but there's a reason for that. I'll describe that in a second. Um, uh, Kind of a news recap, and then kind of a deep dive into a policy document. And so today we're going to be focusing on not a policy document necessarily, but every quarter, Space Capital, used to be Space Angels Network, puts out a new report, and we've been covering this report for a year now. So it's pretty fascinating. We're going to take a deep dive into it in a moment. Um, Before I do that, I kind of want to just give y'all an update about what's been going on. Um, about 2.5 weeks ago, the beginning of October, we were down in Arizona. The Mars Society hosted its annual conference. That was great. It was really terrific to kind of be out in the world. I'm kind of, I think it's kind of funny. I have not traveled nearly as much as I used to. I used to be on the road twice, sometimes three times a month. Um, Pretty typically 4 to 8 days, working days out of the office every month. Um, that was a long time ago. But then when the pandemic hit, of course, everything froze, and I haven't restarted that level of travel. I just haven't. I'm interested. I'm going to some places here soon, I think, but this trip to Arizona, it's only my second trip in 5 years, which I think is remarkable and kind of sad. But meanwhile, my friends are coming in, going to Alaska. My mom just came back from Rome, but I'm still here in Washington State, just outside of Seattle, Tacoma area. Um, so the conference down in Arizona was terrific. The Mars Society, Dr. Zubrin, announced this new development of the Mars Technology Institute. I think it's really a remarkable thing that they're doing. I encourage you to take a look at that. Go to the Mars Society website, go to our YouTube channel. We hosted their announcement about 6, 8 weeks ago. On the Mars Society's Red Planet Live show. So you can find both of those on YouTube, whether it's our channel or the Mars Society channel. So that was really great. It was really terrific getting to see some people, longtime friends of mine. I think I've known Bruce McKenzie probably since maybe 2003, perhaps, something like that, 2004, something like that. Um, uh, Dr. Doug Plata was there. That was really nice to hang out with him. And Dr. Daniel Tompkins was there. And it was really great. Just being out in the world, having coffee, having lunch, having beer. It was good just to be out, with like-minded people trying to make a difference in the world. So that was probably my favorite part. I walked over 30 miles in those 5 days. That doesn't sound like a lot, but that's a lot for me. And the funny thing is I was walking inside a building. So the same building, 5 miles or more, within the same building at the conference center. So that was pretty crazy. We hosted a lot of digital content that those couple days. That stuff will be online in the coming weeks. As far as I know, it hasn't even started yet, so it's going to be a little while. But it's coming. We'll get as much of the digital content online as we can for the Mars Society. The other thing that was really a highlight of the whole experience was getting to do a behind-the-scenes tour of Biosphere 2. That's that giant facility down in Arizona where 8 people were basically sealed in a glass box for 2 years to see if they could live like that. There's a lot of stories about the pluses and minuses of that experience. It was fascinating to go under a rainforest, to go under into the depths, into the bowels of the facility to look at, what does it take to keep that thing going? A pardon me, a man-made reef system was remarkable. So the work that's going on at Biosphere 2 was really quite amazing. And then got to spend a lot of time with the folks at SAM. That's the Moon Mars analog site that's being developed out there. So it was really great to meet everybody, to see that kind of in the background, go in through, take a look at the infrastructure, to see some of the science that's been going on. And this is a facility that's effectively been operating for nearly 40 years. I think it was constructed in the earliest of the 80s, operational, I think in 87. They had some good days and bad days, but overall, it was a pretty remarkable experiment. So with that, I'm going to switch gears and dig into the numbers. I have mentioned, and I'll post this to the chat here in a moment, I have mentioned Space Capital as an organization many times. I think they are one of the go-to sources of information for this industry. Take a look at our past podcasts, past shows. They issue this report quarterly, and we dissect it each time that they issue this report. So it is worth going back and looking at the archive to kind of see what's different. So there's that link. I want to post. This is the link to Biosphere 2 and specifically the Mars analog. It's worth taking a look at this thing. It's remarkable what they are doing down there. So yeah, it's pretty neat. It's pretty neat. Okay, so back to Space Capital. I'm going to do some screen sharing here. So speaking of Space Capital, they've been around for, I think they are the oldest space investment group out there. I first encountered them back in 2006 and 2007 timeframe. So I think that makes them the oldest, what do they call it, the OG of space commercialization. And they have data that is unrivaled. So pretty impressive group. What we're going to do is take a look at um, their report, and you can get that. It's free. They ask you for your email address. You can download it. Uh, but also they have this piece, this dashboard. Now, last time we took a deep dive into their dashboard. I'm just going to recommend that you do that on your own. We're not going to do that this time. But their dashboard is absolutely fabulous. If you want to see what is happening in infrastructure for the moon, not a lot, right? Well, $600 million over a 4-year period. If you stretch it out, it's probably not much better. And then if you look at just the last 2 years, yeah. So it's a great dashboard if you really want to drill into the part of the sector that matters to you. You can find just a ton of resources and information. And it goes back almost 10 years. I think it actually starts in 2014, so that's a little misleading. So we're not going to spend a lot of time with this. We have in other years, in other shows. We're not going to do that this time. I just want to point out that it's a whole lot of diversity in companies and a lot of capital. 283.9. I'm just going to simplify that and say $284 billion across 1,796 companies. I'm going to simplify that and say 1,800 companies. So 1,800 companies, $284 billion have been invested into this sector over the last 10 years. So let's dig into the actual document. I do want to point out this is their portfolio, and what are they putting money into? Mostly seed money, right? 85%. I'm surprised that it's so equally distributed amongst infrastructure, distribution, applications. And we're going to talk about the tech layer here in a minute. I'm surprised it's that equal. I'm not surprised that it's heavily weighted towards satellites. I'm frankly surprised it has this much in lunar logistics and stations. We're going to talk about that in a minute. And this sector breakdown is pretty much what I would expect. I would have assumed that they were going to be putting more into manufacturing. And this is SSA is space situational awareness. That's a military term. The military refers to it as space domain awareness, and the civilians refer to it as SSA, space situational awareness. But this is just tracking what's going on out in space. So that's their portfolio. This is a pretty cool list. I'm not going to dig into it much. You can do that on your own time if you like. But the companies they are putting money into are very interesting companies. Okay. And with that, I'm going to dig into the actual report because that's what we want to spend most of our time on. Stop sharing this and start sharing that. Okay, so as I've done in the past, I'm going to go through the first part, skip to the back part because it's important to have that information, and then skip back to the front. So what are we looking at? We're looking at $284 billion, 1,800 companies. In this quarter alone, $3 billion has moved into this industry. In this quarter alone, 103 companies have received capital. Uh, that's amazing to me. That is amazing to me. Every time I see that, I just keep getting more and more happy. And by the way, as a little interesting side note, I've done some advisory work to the chief scientist of U.S. Space Force. This is his challenge coin. Um, and when I first met Dr. Mosier at Space Force, before Space Force existed, it was Air Force Space Command. I went to him and I said, there's more money in the commercial sector than Space Force's entire budget. And he laughed at me. He did. He's like, that can't be right. And it was these reports from Space Capital and other sources where I would show him that there's more money in the commercial sector than there ever has been in in uh, in the Space Force budget. Now, keep in mind, this was in 2000, let's see, 2018, I think. It might be 2019 when I was having those conversations. So there was even less money then, but there was the Space Force budget in the earliest days was minuscule, minuscule. And so here we are, $3 billion of private capital going into 103 companies. That is really significant, right? And it does, when you start seeing the aggregate across the country, around the world, we're definitely starting to surpass smaller nations' national budgets for space. We haven't surpassed big nations' national budget for space yet, but I have a hunch that's coming. We're not there yet, but we're definitely on that path. So just kind of watch that for a while. Like if you can imagine, the current NASA budget is, let's call it $26 billion, $28 billion. We got 10% of that in just the last 90 days. And that speaks to NASA having lots and lots and lots and lots of conflicting priorities and conflicting projects, all clamoring for nickels, dimes, and dollars, whereas the investment community is able to hyper focus not on research and development, but on commercialization of advanced technology. And so we're really starting to see that happen. And I'll show you some graphs here in a moment. We've had almost 2 straight years of sustained headwinds. We're not out of the woods yet. I think everybody in this industry knows that. I don't think this is a surprise. The top 5 countries receiving investment are US, China, Singapore, France, and India. China continues to surprise me. Singapore continues to surprise me. And I was on a call this morning with some folks, investors in United Arab Emirates, Russia, Portugal, and Singapore. And we were talking about the investment climate. So it is interesting to me that that Singapore keeps getting on the list. I am very surprised by that because of this acquisition, Eutelsat's acquisition of OneWeb, that moved France up to the number 4 spot. Frankly, I never consider France as a significant space nation. I'm going to have to kind of rethink that a little bit because that keeps surprising me. And then this note, notably, despite their historic leadership in the space economy, Russia has seen negligible private investment and barely registers in our quarterly data. That's been true for a long time. Long before their invasion of Ukraine, I have been saying that Russia's space days are behind it, and it continues to be proven out if you just look at the data, and that's been going on for a while. And I'm not going to get into that a lot, but this has been true since before. What was it? I think the invasion was almost 2 years ago, 15, 18, 20 months, 18, 20 months, something like that. And this was true back then because oil prices and ruble valuations were off kilter. This I love only because the area that Liftport is interested in is in infrastructure. Quarter three saw growth in infrastructure investment, which already surpassed the total of fiscal year 2020. 2022. I think that is great. It's nice to see infrastructure really, uh, dominantly holding a place in the space investment ecosystem. So I think that's really cool. I'm going to read this next piece because I think it's really important. It's not been talked about very much. So this was actually a new insight to me. I've been saying it for a while, but I didn't have the data to back it up. So for now, emerging industries are primarily led by government budgets. Okay, let that sink in for a second. May I come back? It has long been the dominant view that defense tech is ill suited for venture dollars. However, in these challenging market conditions, we are seeing more companies chasing government dollars and more investors willing to fund them. I'm going to just make a declaration about this. I have seen the value of the Defense Innovation Unit, some parts of DARPA, and some parts of SBIR, STTRs at Navy, Air Force, Space Force, just propel companies forward. The government, and especially I think the Defense Innovation Unit, the government is seen as a lighthouse investor. They used to talk in terms of anchor tenants, and that hasn't been accurate for a while. An anchor tenant in real estate would be, a Walmart or a Safeway coming in, taking up a very big piece of real estate at a development site, and then having, a haircut place and a teriyaki place side by side. Those two companies generate revenue because of the people going into the main anchor tenant. Anchor tenancies have been important, but that's not really the approach that government is taking these days. They're taking on this role of a lighthouse investor, meaning they are pointing towards areas that they consider, quote, safe investments. And they are pointing towards things that the government has identified that it needs and wants and is willing to pay for. So we're seeing that all over the place. And if you want to take a look at the Defense Innovation Unit, it is they don't publicize necessarily what they're investing in, but I know several companies that have gotten capital from them. And it's what it does is they might only put in $1 million, $2 million, $5 million. But what happens is that tells private investors that it is safe to put their capital behind it. So there's leveraging of 1-to-1, 1-to-3, 1-to-5, 1-to-10, 1-to-20 on whatever DIU puts into a company. And that has been really remarkable. So I do think that defense tech is different for space than it would be if I was trying to make a widget for a battle tank or something. Okay. The majority of private investment has preferred stations, the space stations, when in actuality, lunar and logistics are significantly larger markets. Stations has received 3.8 billion in investment over the last decade. The near-term market made up of commercial LEO destinations funding available over the next 5 years is just $1.6 billion. So 3.8 has gone into it, but the whole market that's currently available under NASA, important caveat, is only 1.6. So they're saying a market to investment ratio of 0.4. That's not great. Meanwhile, the lunar industry has received just 900 million in private investment, despite roughly 22 billion in NASA funding for programs like Artemis and commercial lunar payload services over the same period of time. That's a 24x market over investment. That is remarkable. And I've been saying that for a while, but nobody is me saying that to investors has not broken through to anything. It hasn't led to any sort of investment conversations for us. Finally, 1.2 billion has been invested in the logistics industry, which is chasing roughly 15 billion in government funding. So that's a 12.5x market to investment ratio. So even though stations is the new sexy cool thing, 4 billion has gone into it. It only has $1.6 billion in potential market. That's bad math. Whereas only less than $1 billion has gone into the lunar industry, despite having 22 billion in NASA funding. So if you can get into that lunar funding pipeline, it opens the door to a lot of options. So I keep trying. It hasn't worked for us yet, but that's why we read reports like this. I will point out that because of this imbalance, both Northrop Grumman and Blue Origin have changed their plans regarding space stations just in the last 6 weeks. So I don't think that shakeup is done. I think we're going to see some other stuff happening. I still am pretty bullish on the space station concept. In my kind of roadmap to the future, I've been stating for a long time that stations are the necessary next step for us, for the world. So I've been tracking space stations for about 2 years now. I'm just going to read this because I just think it's nice. By providing essential data and insights to enterprises and governments, space companies have proven to be highly resilient across market cycles. Satellite technologies are the invisible backbone of the world's largest industries, and they play an increasingly critical role in the global economy. However, it's not enough to merely identify a market opportunity. You also need the category knowledge and experience to pick the winners. Right. So this report is, it is going out to Space Capital's investor group. Right. That is the reason for this thing to exist. So that's why they throw that last piece in. But I agree. Right. That satellite technologies are the invisible backbone of the world's largest industries. I think it's true. I think it's underappreciated. I think that means that there's a lot of potential opportunity for the world. Okay. I'm going to jump to the back of this thing because there are some important pieces at the end that need to be kind of acknowledged. This framework is based on the GPS playbook. This document is a fascinating read. It's available on their website. Definitely read it. It explores how the space-based technology generated trillions with a T, trillions of dollars in economic value in some of the largest venture outcomes. So they're like, look, GPS has already done one thing. That's not the whole story. We're going to find some other stuff here in this industry. Space-based technology has become a platform for innovation on a global scale, specifically the development of technology layers on top of space-based infrastructure and the distribution of data for mass adoption, which unlocks thousands of unique applications. So we're going to talk about distribution, infrastructure, and applications. That's an important piece to this. Give me a second on that. We're going to come back to it. I already mentioned the Space Capital has got their third fund. They have $100 million under management. This report is compiled by lots of data sources. Nothing goes into this database until it's confirmed by multiple sources. I think that's really interesting and really significant. And it also tells you that unless a funding event happens in the public eye and is seen by multiple sources, it's not in this database. So I think this one line tells me that their data is the best it can possibly be, but it is not accurate truth because there's stuff that is under their radar that's not being recorded. So when we say that there's 1,800 funded companies and $284 billion of investment, that's the lowest number. It is some number north of that. Okay. Finally, notably, a Starship is expected to pass critical testing this year. The space economy is entering a new phase of infrastructure development. All right, so let's look at what they're doing, right? So they talk about technology layers, infrastructure, distribution, applications. Applications is specialized hardware and software that utilizes data from space-based assets. Distribution is hardware and software to connect, process, and manage data from space-based assets. And infrastructure is hardware and software to build, launch, and operate space-based assets. So that's how they look at this, right? You know, which box, which category does this investment take place? And infrastructure is definitely taking the front seat, which is nice to see. And then they break it up into these 6 sectors. So kind of they look at the buckets in 2 different ways, right? So infrastructure, distribution, applications as a layer, and then the sectors is satellites, launch, stations, logistics, lunar, and industrials. So that is their mindset when they're trying to figure out where they're going to put their capital. And this is the way that they evaluate the report. And then this last piece kills me. Of these 6 industries, these right here, the largest is satellites, which is 88% of investment capital. 88% is right here. While launch accounts for 10%. So these 2 are 98% of all the money, $284 billion, 1,800 funded companies. And then 2% is left for stations, logistics, lunar, and industrials. So to me, this says that this is the next big play, but there haven't been enough identified opportunities to make this number grow. I would love to see, and this is not in their data, I would love to see how this changes over time, because I bet it does. This data is over 10 years. And if you look at the last 3 years, I bet you it is not these numbers. And that might be available if you were to play with their dashboard tool a little bit. You might be able to surface that. So that's I think really an important detail. My hunch, and I don't have evidence for it yet, is that stations, logistics, lunar, and industrials is probably a growing segment, but it's not. It hasn't jumped from 2% to 22%. It's probably jumped from 2% to 7%. I made those numbers up, but this is remarkable, right? 88% in satellites, 10% in launch. That's crazy to me. And then this is the matrix in which they operate, right? So applications, the applications, distribution, and infrastructure, that's the tech layer, technology layer, down the side, and then across the top, launch, satellites, and emerging industries. So this is how they look at the world. And I think this is also saying these are where the opportunities are, right? I don't know what the opportunities of applications and industrials. This spot right here is missing. Industrials and distribution, there's something missing here. Lunar and applications missing. Lunar and distribution missing. Satellites and applications missing. Stations and applications missing. Stations and distribution missing. I think these things tell us that there are businesses to be built in these sectors that have not yet been built, or at least have not yet been funded. So that tells me that there's some opportunities out there. I don't know necessarily how to, put my hands on those opportunities, but I think that they exist. But this is how Space Capital evaluates their world and how they track things. All right. With that, I'm going to come back to the front of the document. Okay. One other piece. Sorry, I missed something. Where is it? Oh, right. This part, this technology layer is informed by the 2020 NASA technology taxonomy. I'm like, what is that? So NASA has a 2020 NASA technology taxonomy report. It is 239 pages long. It is basically how NASA manages the technologies that they are supporting, that they want to build. As part of the work at Mars Technology Institute, there's been talk about developing a roadmap of technologies necessary to settle Mars. These are the technologies that NASA uses to communicate with each other and to vendors and to research groups, small business research groups. So we talked earlier about lighthouse investors, right? The government being a lighthouse investor. They're saying, look, we want aerospace power and energy storage. We want robotic systems. We want exploration, human health, life support, habitation systems. And then not in just this one page, but in hyper detail, they say, look, here's the propulsion systems we're interested in: chemical, electro, aero, advanced propulsion. Electromagnetic tethers, that's kind of some space elevator stuff there. And then that's still not enough. They break it down into even more detail. Each of these goes into more and more detail. This is specifically saying we at NASA care about these things. Help us build these things. So it's pretty easy to use, right? You find the general area that you're interested in. Propulsion. Scroll down. Okay, not just propulsion, but 01.4, 01.4.2, and then I could just do a search and find it. That's how I found it the first time. Electrodynamic tethers. Electrodynamic tethers are long, lightweight cables that produce thrust through the Lorentz force by carrying electrical current and interacting with the planetary magnetosphere. So far as I know, they haven't funded this work in years and years, but it's still on their list, so that's always good to see. Anyway, so that taxonomy was really interesting. I had never seen that thing. So I just wanted to point that out. The NASA Technology Taxonomy, 2020 NASA Technology Taxonomy. It's very easy to find. I'll post a link to it. But if you're writing reports, if you're writing proposals to NASA, you got to make sure that you use the taxonomy that they want to see. Okay. Going back to the document. This stuff is stuff that we've kind of talked about already. $11.6 billion year to date. That's how much money has moved into the system. That's 40% of NASA's entire budget. I think that actually exceeds Space Force's budget. I don't know if I can find that answer quickly, but I think that no, I think they're closer to 16 billion. So we probably won't exceed Space Force's budget this year, but we're going to get pretty close to it. This is the area I pay attention to. 1.2 of early stage investments, almost 66%, almost 2/3, 62% is focused on Series A and seed funds. That is great. As long as that number is good, that tells you there's a thriving ecosystem to support the space economy. We just saw a minute ago, 250 billion has gone into satellites, 30 billion has gone into launch, and 6.5 billion has gone into emerging industries. Frankly, I am surprised it is that high for emerging industries, but that's the number that we need to see grow if our goals for the moon, if our goals for lunar elevator, if our goals for Mars are going to be realized. We need to see those numbers grow. And I think it's going to take a long time to do that. I don't think it's a surprise to anybody that the United States has half of the global investment in space. The China Belt and Roads Initiative just issued their 10-year report. It's fascinating reading. Definitely take a look at it. They're saying, it's a propaganda tool, but it's been a diplomatic super success. I'm wondering if the economics of the Belt and Road Initiative are going to justify it, but politically, it has been extraordinary what they've accomplished with that. So it's no surprise that the Chinese investment into the space has slightly surpassed a quarter of all investments. So we're going to be watching that pretty closely. Belt and Roads has formally expanded to the sector of space, and their International Lunar Research Station now has 9 partners, seven national partners and 3, I guess it's 2, 3, might be 10 partners. 7 national partners and 3 NGOs. They're definitely making progress. The 7 national partners are all relatively small, relatively not involved with space, but politically, like I said a minute ago, China is using the Belt and Roads Initiative to be very successful, and I think it really showcases the bifurcation of like the global blocks of space coming. So in the old days, it was U.S. versus USSR. I think it's going to be U.S. and China, and we've seen that over and over again, and it's being played out in the data as well. Let's see, what else are we looking at here? They always update this chart for historic context. I think it's worthwhile reading that directly. I always love when Planet Labs images the entire world every day. I think that's remarkable. Uber, most people don't think of Uber as a space company, but their whole business model depends on 24 satellites circling our head 10,000 miles above us. So I've always counted them as a space company. All right. 103 rounds this quarter. That's great. I'm very happy to see that. Slightly higher than prior quarters. That's always good. So this is where they're saying earlier that we still have some headwinds, but things are starting to look up a little. Okay, so here's infrastructure. I'm going to do these in reverse order. Applications was the thing that was getting all of the attention. That has dropped off dramatically in the last 3 years, right? It has its heyday all the way back in the beginning of kind of the new space economy. And look, it's all giant money, right? late stage companies are pulling in giant amounts of money. So I feel like this is kind of misleading, and I don't think it's long-term sustainable. Small companies are not getting those big raises. So we're just going to be watching that for a little while. I think that skews the perception that, all the money's in applications, let's do applications. I don't agree with that. And because everything is so skewed dollar wise, I think it misrepresents the market, because half of the investments are seed, 66%, 2/3 is seed and Series A, and yet that doesn't represent a drop in the bucket. I don't even know if I can figure that. What is that? $10 billion? Might not even be that. So I think that warps our perception of what's going on here. So just kind of watch that, and I think if people are making claims about applications, I think it's I think it's disingenuous. Look at it. It was $40 billion moved into this industry in 2018, and probably less than $4 billion went into this industry so far year to date. So yeah, I don't want people to get caught up in the applications piece. These companies, I don't know these companies. Indigo Ag, eFishery, Shield AI, Ola Electric Mobility, Silvera, Series Imaging, Space Eyes, Luma AI, Pano, and Chowbus. I seriously don't know a single one of those companies. And that feels pretty weird. That feels pretty weird. So we're going to watch it, right? It's a thing, but it doesn't impact us directly, right? I'm going to do these pieces last. So let me just do distribution. Distribution, I think, is I think there's a lot of opportunity there. Hardware and software to connect, process, and manage data from space-based assets. I think I'm not screen sharing. Am I screen sharing? Yeah, there we go. Sure hope I've been screen sharing for the last 5 minutes. So hardware and software connect, process, and manage data from space-based assets. I have a hunch that comms, especially laser comms for the moon, is going to be the next cool thing. We're starting to see, we've seen 8.8, almost $9 billion move into this sector. 72%, more than 2/3, is in Series A and seed. And that represents pretty close to $1.25 billion of new capital. I think that's really good. I think you're going to start seeing things like laser communications being really significant here. And again, the United States is leading that. Laser comm and the congestion of the electromagnetic spectrum is going to be a problem. Sorry, not laser comm. The congestion of the electromagnetic spectrum is going to be a problem. There are, by somebody's calculation, 1 million paper satellites in some form of PowerPoint or industry application level of development. We know about Kuiper and OneWeb and Starlink. Starlink just submitted for some additional satellites in a different orbit, so I was a little surprised by that. But whether it's millions, which I think is pretty unlikely, or whether it's merely a couple 100,000 satellites, one way or the other, comms is going to get congested. The electromagnetic spectrum is going to get congested. So my hunch is that laser comm is going to be more and more important. And that's not really reflected here because that technology is still very, very new. But here, the benefits of AI and machine learning helping to streamline data processing for both space-based and terrestrial use cases is just beginning to be realized. I'm curious to see where this goes. I don't really have a whole lot to say about the companies in this sector. But one thing I'll point out is that, you know, like a moment ago, big deals, Series C and late stage deals are where the cash is, right? People will put new money behind proven successes, and that has got to be good news for everybody. So um, if you can get past the valley of death stage, whether it's valley of death caused by uh, you know, limited funding from SBIR, STTR, if you can get past the valley of death of, your first Series A, does that get you to a market? Does that get you to a product? If you can get through those hurdles, there's a lot of money to support you on the back end. So I think that's really great. I love how deals under 5 million, right? Crucial, SATM, Tilebox, Oxford Earth Observation, and Vermeer. Deals under 5 million make the top 10 deal list. But I mean, at the top, you've got $280 million as number one. Number two is only 22 million. So the skew there is so weird. So weird. So, I don't know if that tells you that it's a thriving, fully developed ecosystem. To me, that says there's opportunities in this sector. Um, and then this is where we live, right? Infrastructure, hardware and software to build, launch, and operate space-based assets. Now, that's all about launch. That is not where we live, right? But they have taken this section of $65 billion, and a subset of that is emerging industries. And that's where we're going to spend the rest of our, that's where we really want to focus. So $65 billion going into the industry for infrastructure, always cool. The United States has the lion's share, nearly 70% of all investments in infrastructure. And let's talk about that, right? Because launch for the United States is a pretty mature industry. It is not a mature industry in other parts of the world. And you can see that in late stage investment, we are putting a lot of money into launch. But that other organizations, other nations are also putting a lot of money into launch. But this is everything, right? Again, more than 73, almost 70, almost 3/4 of all the money is in seed and Series A. We're not going to get into this chart, but it's pretty interesting. The one I care about is there's 77 rounds focused on lunar development, and I think that's pretty remarkable. And then 10% of all of the infrastructure money is in emerging industries. But $6.4 billion seems like a lot, but that's over time, and that's in comparison of $284 billion. So 6.4 billion is good, but it's not great. 80% of the money is in seed and Series A. This says really good things to me. Look at this. Axiom raised 350 million. Sierra 290 million. Compared to Psionic at 4 million. Space Perspectives, those are the folks with the balloons. That's at 5 million. KN Space is orbital debris and tracking, 7 million. Slingshot, it astounds me that Slingshot ever raised a nickel, but good for them, 8 million. So most of this is happening in the United States, right? 81% is happening in the United States. I don't think that's a surprise. This, to me, is the innovative part of the industry. This, to me, is where the future is. And very little capital has gone into it, very little by comparison to everything else. And most of it has been in 2021 and 2023. I love this chart. This chart is great. Lots of rounds happening, right? 103 rounds. I don't know how many. Out of 103 rounds of this quarter, was that, call it 50 rounds, went into this one emerging industry. This says really good things to me. I'm very happy with this. It says this sector of the industry is thriving with new innovation, new ideas. And I'm excited to be a part of this part. I think that's kind of all we're going to talk about. Breakdown between stations, logistics, lunar, and industrials. 3.8 billion for stations. That doesn't really surprise me. 1.1 billion for logistics. Just under $1 billion for lunar, and maybe 600 million for industrials. If I had, a spare $1 billion, I would be putting it into those sectors. I'm very bullish on space stations, but I think that the lunar and industrials is where the future is going to be made. So with that, I'm going to go ahead and close out. Oops, cancel that. Stop screen sharing. All right, with that, I'm going to go ahead and close out. Oh, Doug, I only just saw your message. Hold on. All right, I'm going to go ahead and show that. This is Dr. Plata. My view is that the surface technologies won't be fully developed until Starship is getting close to needing those payloads, because it will shortly be landing on the moon and Mars. I tend to agree with that. I think there's room. His next comment is Starship is a forcing function. Definitely it is. I think that the time to start building those sort of lunar infrastructure elements is now, so that you are in a position, you have a team, you have a technology, you have a market that you're aiming for, so that when Starship, when Blue Origin, Rocket Lab, and all the other space logistics companies are functioning, you've got a path. So that's why I'm so bullish on starting to build things now. So I think it's time. Okay. With that, I'm gonna skip out. Thanks for joining us. I appreciate it always. We're going to go back to our kind of normal Monday, Wednesday schedule starting next week. We also have the Space Frontier Foundation's Pioneers of Space Commercialization series on Tuesdays, intermixed with the Mars Society's Red Planet Live, intermixed on Tuesdays. And I'm pretty sure we're going to start a new series focusing on the defense side of space. So I think that's coming soon. All right, with that, I'm going to get out of here. I appreciate it, and I'll see you next week. Bye, y'all.